The central bank's decision to increase interest rates by 150 basis points follows rising inflation rates. The CBN expects higher inflation in the year owing to external and local factors, if not curtailed.
The major central banks such as the US Fed, the Bank of England, European Central Banks, and the Bank of Canada have provided strong guidance of a progressive shift away from monetary policy accommodation to drive market interest rate upwards, which may ultimately impact capital flows away from emerging market economies. Domestic price development is, however, expected to maintain an upward pressure in the light of the build-up of increased spending related to the 2023 general elections.
At its last monetary policy meeting in March, the need to strengthen Nigeria's fragile economic recovery took precedence, even with a GDP growth of 3.98%. But with a GDP of 3.11% at the end of the first quarter in 2022, the rising cost of energy and electricity tariff did not sway the bank's decision to increase interest rates in a bid to rein inflation.
While it may seem contradictory to raise rates in the face of fragile growth, it is a dilemma that most central banks around the world today are grappling with at this time. Yet, on balance, it is quite clear and compelling that tackling inflation is more urgent in the sequence of policy objectives.
With interest rates at 13% from 11.5% in September 2020, lending rates are sure to spike, further compounding challenges businesses face to stay afloat. To tackle this, the CBN says priority sectors will continue to receive support through single-digit interest rates.
In this regard, MPC urged the bank to redouble its efforts at supporting the priority growth-enhancing sectors of the economy, while urging the federal government to do more to provide a safe and secure environment for economic agents to boost activities and eventually stimulate growth. The bank further reaffirmed its commitment to continue to provide support to priority sectors as the need arises to support growth until the current upward pressure in price development abates.
As Nigeria's election year gets into full swing, will a hike in interest rates curb skyrocketing inflation? Time will tell, but the recent move by the CBN is sure to get the attention of foreign portfolio investors and might help a fast depreciating naira. But it's an election year, and with it comes political risks. Onyi Sunday, Arise News.